Hi guys, welcome to this Moneycontrol live stream. A brand new week, and of course, we are poised to start this week on the back foot, given the fact that the GIFT Nifty is hinting at a weakish start for the Indian market. Although we have very strong cues coming out of Wall Street, where we are headed this week. I'm joined by Ajit Mishra, who's a senior VP research at Religare Broking. Ajit, as usual, great to have you on the show. Want to understand, till now, last week, of course, we saw technical bounce. It kind of faded. We saw the Nifty again, going southwards. Friday it managed to hold on to that 24,100 mark. But this week, would you believe that the Nifty has the capacity to defend lower levels, 24,000 on the downside?
Yeah, good morning, Nandita. So thank you for having me. Yes, it's been almost like 2 weeks of struggle that we have been seeing this index hovering in 24,000, 24,500 marks. So we made attempt on both sides means, but on the closing basis, we are still trying to hold these levels. Uh, this week is going to be critical because we are in the last leg of the earnings season. FIs, they have sold roughly around 1,45,000 crores so far. So we have to see whether this continues or not. Among the two key sectors, basically, Nandita, which I'm keeping a close eye on, one is IT. So IT has, last week shown tremendous resilience that it recouped the losses a week before and ended on a strong note. Banking, I was hoping that that could provide some, relief also, and that would help the market to surpass this 24,500 mark. But as of now, the way private banking majors again they are witnessing a bit of a profit taking, and we are seeing a mixed trend. Near-term outlook still looks sideways to us, at least positionally for the Nifty index. So in the interim, the focus should be more on themes sectors wherein we are seeing outperformance. So IT, PSU banking, select private banking majors. Then we have select stocks from the auto and pharma space as well. So that is how one should align the positions on the long side. At the same time, since the texture of the market is still negative, maintaining few shorts are equally important until we decisively reclaim 24,500.
Okay, 24,500 remains a crucial level. Time to be theme and stock specific as well. But let's talk about the Nifty Bank Index. You mentioned that select private banks have come under profit taking, a bout of profit taking once again. The Nifty Bank Index, at least in the pre-open, is hinting at a very quiet start with a positive bias in contrast with what the market is looking like. But 51,500, that has been maintained as of now. So on the higher side, would you expect 51,800, 700 kind of levels for today and for the PSU banking lot as well? Whenever we've seen the market stage a technical bounce, PSU banks have been doing well. So here on, do you think PSU banks deserve more weightage right now?
So banking, like I said, honestly, I was looking for a break last week itself from the broader range that we have been trading in, 50,500 to 50,600 mark. We've almost there, at the beginning of the middle of the week, but in the last three sessions, we saw that the move again fizzled out. So this indicates that banking also might continue to remain in a range, at least for a time being now. PSUs, they are definitely outperforming, and the select names like Bank of Baroda, SBI, Indian Bank, they have done exceptionally well, and then it should, aligned, your position should be aligned to what we are seeing, irrespective of the sector. So PSUs alongside with select private banking majors like HDFC, wherein we are still seeing resilience, is something that one should continue with. So index is still a range, but stock specific, yes. Majority of the position, as you can say that, especially from the PSU basket and select large cap names from the private banking space, buying opportunities are more lucrative.
Okay, but given the fact that SBI reported numbers on Friday, I just want to take you through some of the brokerage views there. Jeffries has a buy rating. Target price has been raised to 1,030 vis-a-vis 1000 that it had earlier, and it remains a top pick for Jefferies. And uptick in deposit growth on a quarter-on-quarter basis, has been a key positive according to Jefferies. And of course, the asset quality also remains pristine. The margin pressure has been there, as has been the case for other banks as well. So here on for SBI in particular, 846, that's the kind of level I can see on the screen right now. But 900 in the coming days, perhaps in the next 4 to 5 sessions, could that be a possibility? And what should one really do with the stock post earnings?
So certainly, yes, the possibility of retesting its record high around 900 plus zone is looks more prudent, and since we have formed a very strong base around 800 mark in the last 4 5 weeks, and then we saw this recovery. So yes, one should definitely stay put, and as like what we've shared earlier, also that within the PSU basket, SBI, Bank of Baroda, they are the top two names because if you consider the overall relative performance also within the sector, they are trading closer to their record high. So that is something that one should be focusing on, especially when the market is indicating a negative structure overall. So within the sector, otherwise also both these names definitely can be on your buying list. For SBI now 800 is a very strong base, so that should be the stop loss, and 910, 920 positionally should be your target zone.
All right, that's the view on SBI. But let's talk about Divi's Lab as well. The company has reported very strong set of numbers. Profits have risen over 46% on a YY basis. Revenues have also risen in excess of 20%, and margins have also come in at 30.6% vis-a-vis expectations of somewhere around 30% or thereabouts. Stock performance has been extremely good over the last 6 months, but last 1 month it seems to have given up some of the momentum. So here on 6,155 is where it's at, which is just 170 odd rupees, from 100 odd rupees, 120 odd rupees from its 52-week highs. Post earnings, do you see a possibility of that happening, and do you expect the stock to regain momentum here on?
So it seems quite possible considering that again within the pharma space, Divi's Lab is outrightly clear outperformer and is still holding around its record highs, witnessing marginal profit taking or normal consolidation. So I feel that until we break this mark 5650 decisively, the trend is not going to reverse, and upside is open since we are. It might take a breather around 6200 mark, which is the previous record highs, but upside is open. So keep on trailing your stop losses on every rise, and for fresh buying also. In fact, even the current levels, 5650 should be your stop.
Okay, 5650 stop loss for Divi's Lab. But with that, we have the opening bell right here. Let's see how the markets have really opened up. It is a weak start. In fact, we are looking at 24,000 on the downside right now, just about clutching on to that 24,000 level as we speak, and it's about to be broken. It's a 140 point downside on the Nifty, the Sensex as well, just about 450 points down. Mid cap index, the cuts are deeper there. You can see a 1% cut coming in on the Nifty mid cap index. The Bank Nifty also has given up that 51,500 mark, 51,300 or so. That's where it's at. I want to see what the other sectors are really doing at the current juncture. You have autos, you have IT, all of these sectors are in the red. IT, of course, was the outperformer last week. But in a spot of bother today, we are seeing some bit of profit taking there. The pharma pack is holding on in the green, 0.5% uptick coming in on the pharma pack. Aside of that, most of the sectors are trading in the red as was expected. And the Nifty small cap index as well, down about 0.3% or thereabouts. Let's take a look at the individual movers then and see which are the stocks that are emerging as the top losers. No points for guessing. It's Asian Paints that's down 7% on the back of utter disappointment when it comes to the volume growth. Street was anticipating a 5 to 6% kind of a growth when it comes to volumes, but it saw a degrowth of 0.5%, and that's come in as a major disappointment. So Asian Paints top laggard, 7.5% down as we speak. Shriram Finance, Axis Bank, HDFC Life, these are some of the other laggards. Financial space, of course. And if you look at ONGC ahead of numbers, this stock is also trading in the red. IndusInd Bank, Reliance Industries, Adani Ports, Hindalco, Bharat Electronics, these are some of the other laggards. Even the Bajaj twins, Bajaj Finance and Bajaj Finserv are in the red. On the other hand, Maruti Suzuki, that's the top gainer. Almost a 1.5% kind of gain coming in a weak market. Some of the tech names like HCL Tech, Infosys continue to trade in the green. So although the IT pack is trading in the red, some of these stocks are managing to hold fort. Trent, that has seen a massive downtick after its numbers, has managed to limp back 0.2% kind of gain coming in on Trent. HDFC Bank is doing well today. SBI in the green, and so is Kotak Mahindra Bank. So select banking names, select auto names, even Tata Motors for that matter. I want to point out numbers have been underwhelming, but the outlook has been fairly buoyant, and which is why I think the stock is trading in the red. But before I talk about other stocks, Asian Paints, I want your thoughts on this particular stock. Ajit, 2565 is where it's at. It has shaved off 7.5% post earnings. Where do you think the stock will find support?
So, Nanda, it's almost like 3 years now that the stock has been hovering in this broader range, and currently we are, trading at the lower end of this range. So, this current levels close to 2500 is what the last time when we saw the stock witnessing a bounce in the month of June 2022. So that is critical to hold in case if we have to see any recovery or a bounce. The stock definitely looks oversold. So for fresh shorting, I won't recommend those who are having longs by any chance. 2500 on the closing basis should be a stop loss. And in case of recovery, 2750, 2800 will be the area of resistance. So around that area, one should look to reduce your position if it's a trading bet.
Okay, that's the view on an Asian Paints. But Tata Motors is the other one. The stock has been an underperformer, has been bleeding. If you look at the monthly charts, 3-month charts, 6-month charts. But, numbers have also been underwhelming, as I pointed out, all below estimates. But the fact that the company has maintained its JLR guidance and reiterated that it will be net debt free this year, that's something that may have found favor because the stock is holding out in the green even though the market is weak. Tata Motors, how is it poised on the charts now?
So yes, within the auto space, Tata Motors has been underperforming for almost 2-3 months now, and despite the oversold position, we are not seeing any decisive or sustained rebound. But since we have very strong support around 780-85 zone, and today we have made a low around 792, and then we are seeing this recovery. We expect like some bounce, some recovery towards the zone around 830-835, but that's a strong resistance which the stock has been holding in a short-term moving average resistance. So once we cross 835, then this bias might turn from negative to sideways, and we may see some further recovery towards, let's say, around 860 to 900 zone also. So as of now, if you have any existing position, you may stay put with 780 as a closing stop loss. But for fresh buying, one should wait for a breakout above 835.
Okay, that's the view. For fresh buying, wait for a breakout about 835 on Tata Motors. Let's take up some of the viewer queries then on that note that are trickling in this morning. Hindalco, of course, reports its numbers later today. We have Pooja, who's written in, and she has a query on Hindalco. She's holding Hindalco at the rate of 685. She wants to know if she should exit or whether she should hold on to it or whether she should add more to it right now, average so to say. So 685 is a buy price and 645 is where the stock is right now. Making a bit of a loss here. Would you advise averaging?
So averaging not at current levels, Nanda, considering that the market tone is negative and we are seeing extreme volatility within the metal space also. So post Novelis numbers, we have seen this decline. The stock was trading strong before that, and after this decline, we are again trading closer to its long-term averages, which is placed around this current area, which is 640-45 zone. So on the closing basis, it should hold 640 mark. So that should be your closing stop loss if you have any existing position, and use any recovery towards 670-75 zone to reduce your position, because near-term outlook looks sideways to us, especially after this recent decline, because the texture that we were seeing, it's been maintaining for quite some time. that has disturbed after this sharp decline last week. So reduce your position on rise is something that we recommend, and meanwhile maintain a closing stop loss at 640 as well.
Okay, that's the view, that's the advice. Hope it helped you, Pooja. The next query is coming in from Satya CK. He wants your thoughts on a Jamna Auto, whether he should average, hold, or switch. He's sitting on a 20% loss at present. Of course, this stock is, of course, is stuck in a downtrend. All the long-term charts that I can see, it has not really managed to stage any kind of a rebound. Jamna Auto, if somebody is making such a huge loss on it, would you advise them to book their loss or wait for some kind of reversal?
So, Nanta, it's been almost in a broader range for 2 years now. That though it made an attempt of breakout, in the middle of the year, but again after the failed attempt, we are again seeing some consolidation and profit taking coming in. So the good part is that this 100, zone is something that it has already tested, and that was the neckline area of the previous consolidation range, pattern handle. So we may see some bounce and recovery towards 100, zone. So with stop at 105, you can stay put and use this recovery to reduce your position. So around 120 area, definitely you can look to reduce. And for existing position, do maintain stop at 105 as well.
Okay, that's the view, Satya. Hope that answers your query. But I want to take up the next query. This one was on ITC. Hemant wants your thoughts on this stock. The stock has lost steam, really. In the last 3 months, 1 month, if you look at the stock, it has been fairly sideways. Any possibility of some bit of regaining momentum here, because it's below that 500 level and it has been there for some time. 529 or so has been the 52-week high on this stock. But do you think it has fallen back into that whole range bound kind of a trend, or do you see some possibility of this stock once again gaining momentum and reclaiming that 500 level?
So that's right that we are seeing correction in ITC also, but if you compare it with the other FMCG counters, though it's not completely an FMCG counter per se, but still the performance is comparatively much better to what we have witnessed in HUL, Colgate, Dabur in the recent weeks. So I feel that it's comparatively stronger as a structure also, and 470 is where we have multiple supports on different time frames. So that should be a stop loss for the existing position. For any fresh momentum, we need a close or a breakout above 485 mark. So once we reclaim that mark, then there's a possibility that the stock might inch toward 500 or maybe higher. So as of now, you can stay put with 470 as a closing stop loss.
Okay, keep 470 as a closing stop loss on ITC. But let's also talk about some of these companies, white good companies like Whirlpool. Reported numbers, profits jumped 40% on a YY basis. Revenue also grew in double digits, 12.5% or so. Margins have expanded to over 5% from 4.8% in the same quarter last year. I think the stock is under some kind of pressure today, 4% down as we speak. Last 5 days, we saw the stock attempting to make some kind of recovery after seeing a 10 to 15 to 16% kind of correction in the last 1 month or so. Do you think these feeble attempts at recovery are unsustainable now? Because although numbers are looking good on the face of it, the stock is down 4%. The weakness continues.
So, Nanda, yes, the move was almost vertical last year when we saw the stock moved up from 1200 to 2400, and it's kind of like it has already discounted the positives that we have in the stock in the prices. So that's why we are seeing this profit taking continuing, despite the positive numbers. And this decline may extend further if it breaks 1950 mark. So from the trading point of view, that should be a strict stop loss, because otherwise the stock might inch toward 1800 to 1820 zone in the next leg of the down move. So be strict with your stop losses at 1950. for Whirlpool and use recovery towards, let's say, 2100, 2150 mark also to reduce your position.
Okay, Whirlpool, that's the call. What about Vijaya Diagnostic? I think there's a query coming in from Pawan Rajesh on this stock, and he wants to know if it warrants an entry at current levels. The stock saw a very good up move in the last 5 sessions. We've seen 15% kind of gains monthly as well. Stock has done well. Last 6 months, we've seen almost a 50% kind of an up move. Would you advise waiting for some bit of cool off before entering, or would you say that 1100 levels are okay for an entry point?
So, see, it's outperforming big time to what we are seeing in the mid cap and small cap space, and the stock has reclaimed the record high also with very strong volume in the last trading session. So, but as you have rightly mentioned, that the move was almost vertical from 875 to 1100 plus zone. So, it might witness some consolidation of profit taking first before making further recovery. So 1070, 75 is the area basically where one can look to go long with the 1025 as a stop, and positionally 1300 plus something is one can maintain as a target zone. So yes, still a buy on dip candidate with the 1020 as a stop loss.
Okay, couple of more queries to go then. Shakti Pumps, that's the next one that's coming in from Kishore. He is not looking at it from a trading perspective, but from an investment perspective. The stock is down 2.5%. Last 1 month as well, the stock has shed somewhere around 8 to 8.5%. And the last week, we did see that the stock was attempting to make some kind of recovery. Any kind of particular trend that you are spotting here? It's at 4,550, still 500-600 rupees away from its 52-week highs.
So, since his view is long term, definitely he can stay put. But since, we are seeing pressure in the mid cap and small cap space also in line with what we are seeing in the index, so it might remain in a range. And since the stock witnesses comparatively lesser volumes, so it's good as long as we are not seeing any sign of a rise in the volume. So that might result in sharp decline. Maybe once people might try to exit their longs to save their existing weaker position. So as of now, definitely he can stay put.
Okay, that's the view on a Shakti Pumps. Just one query to go then. Utsav Jain wants to know your thoughts on a Zomato, and we also have another person, Nanda Reddy, wanting to know about Zomato. Utsav actually holds the shares for 274 rupees. He wants to know if there is any hopes of a reversal to reach levels of 300 on a Zomato. Of course, Zomato hasn't really been able to clock that 300 level yet, but the stock has been witnessing profit taking, and of course, this week we also have Swiggy making its debut on the Lal Street. So, how are the charts really? What kind of signals are you getting from the charts of a Zomato now?
So it's still trying to hold the key areas. So 240 is basically the zone where we have multiple supports, and then we have next major support at 230 mark. So yes, until we break that mark, the trend is not going to be on a negative side, but the texture from earlier that we were seeing a decisive and clear momentum that has shifted to largely sideways, but with a positive bias. So you can maintain your longs and wait for a closing above, let's say, 260 mark to reclaim some momentum and inch towards the new high, which is 290 plus zone. So as of now, you can definitely maintain your longs, and 230 is the area basically where we have major supports.
Okay, major support at 230 level. But this wraps up our query segment for today. For those whose queries we couldn't take, please don't get disheartened. We'll try and take them up tomorrow. But Ajit, before I let you go, what would you be keeping on your radar in terms of stock picks for today?
So Nanta, like IT, what we have discussed earlier, also being the strongest bet that we have at present, and HCL Tech is something that we have recommended to our clients also. The stock is trading closer to its record high, and we expect this momentum to sustain further, and this outperformance also to continue. Once the market is going to resume the uptrend. So as per the range, 1910 is something that we are eyeing, and 1795 should be your stop loss for the long trades. And since the Nifty structure is still negative, certain stocks on the short side is something also that as a trader you should maintain. And Coal India is offering you such opportunity. So the stock has been struggling below its major averages for almost 2 weeks now, and it seems like next leg of the downtrend is ready. So 420 is currently quoting in spot markets. So with stop at 435, one can go short in Coal India with 390 as a positional target.
All right, HCL Tech on the long side and Coal India shorting candidate. These are the recommendations coming in from Ajit. With that, Ajit, always a pleasure chatting with you. Thanks a lot for taking out time and joining in and sharing your thoughts with us this morning.
Thank you, Nanda. Thank you. Thanks a lot.
This edition of Opening Bell, just about looking to get back into the green. In fact, the Sensex has, edged back into the green, and so has the Nifty, 24,150 on the screens. Well, with that, thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. Thanks a lot for watching.